All right, Ross, what's your message to the shorts today?
Just cover and accept the loss. You know, it's not going to get any better for them. You know, with Tesla China actually putting out cars right now, we see them delivering cars as we speak. That is in nobody's numbers right now. So whatever your delivery number is, we don't know, but we're starting to adjust up by thousands of cars.
So, Ross, is that what you think is the main trigger for this? I mean, what in your mind has been behind this particular leg of Tesla's story, the move up from June?
Absolutely, Oliver. This is enormous. You know, we did this podcast the other day. I did with a group called Tesla Third Row or whatever, and it's on Spotify. And during the course of this podcast, we started talking about Tesla. And it was some really smart Tesla people, Gally and Vincent and Hulk and Sofan, and this team of people have spent their lives like really analyzing Tesla. But the enormity of the opportunity sort of hit me in this conversation with Tesla China. The stock started really rallying actually right after we released the podcast. Not saying that we had anything to do with it, but it's just like it just hit me. They're delivering cars in the biggest EV market in the world. They're going to make them so much cheaper than making a car in Fremont, California. You know, Oliver, it's the worst place you could ever make a car is actually in Northern California when you're trying to control cost. So when you think about making it in China, the upside is enormous, and the Chinese community around Tesla is super into it. So this is an enormous opportunity.
Now, obviously, we've got stocks at highs. High beta stuff is coming back. Tesla's a part of that. But even with that said, in the macro backdrop, this seems to be, again, Tesla specific. I mean, the last earnings did a big portion for turning the narrative around. Elon's out of the courts without any blowback. Ross, what is, though, the risk point? Because there still are some. I mean, we just experienced a drop in the stock that was savage, right? And I mean, I think it was probably shaking everybody. Now, they've come back this time, and it's an all-time high. What's the risk point now, though?
Well, Tesla's a high-risk company, so I don't want anybody to think otherwise. So an investor in this company has to understand that a lot of things could still go wrong. And you could say that about a lot of companies, but Tesla pushes everything to the limit. Their timeline over the next 4 years of what they're trying to achieve is enormously aggressive, and really, I think it's the most ambitious company in the world. And so I think that also creates risk, and so I think for an investor like me and my clients, it's a part of our portfolio. It's not the majority, or it's a large position in our portfolio, but you know, my biggest positions Disney and Apple, and you know, these are great companies to own as well, and have done really well for me with a lot less stress. You know,
so is the profitability that was a bit of a surprise to the degree that it showed last quarter? Does that have to stay positive? Do we have to keep seeing bottom line numbers in the black?
Yeah, and I think that's why the story is so positive. Is the capital raise really put them over the limit as far as being at risk for running out of capital with their ambitious timelines of building factories. And then the second, factor, post that, now, by being a sustainable company in now an era that's punishing companies that aren't sustainable, and these are issues that Netflix is going to face, and certainly all the companies that are cash burning, is even though there's tons of capital out there, investors are asking way harder questions today than they were just a few months ago. And WeWork started that process, and it's a really healthy process. I mean, you literally see marijuana companies now that have great prospects, desperate for capital, and it's a huge opportunity in that business right now. But I think, by being sustainable as a business, Tesla is much more attractive. And that is what the market's saying. But I think what we're going to see is if Elon can get full self-driving out by the end of the year, so he's working real hard right now to get this out in the next 2 weeks, they get that incremental free money that's been on the books but hasn't been realized, and that's like at least at $400, $500, $600 million over the next 12 months, and that'll kick in this quarter. So So we expect that to happen, and that will put in about 125 million of profits, just pure profits that a lot of people just don't even have in their estimates at all. So I think that's a key component to them being profitable moving forward is really just an accounting thing.
Ross, last thing on the China point, given how much import you put on that, the price cut that was reported today that might be happening, I think is pretty interesting. The market's seemingly okay with it. In the past,
yeah, that's nonsense. I wouldn't take
what do you mean
in that report? I don't believe that report.
You don't think the report?
No. Once again, that's a FUD report. Like if somebody says that's meant to hurt demand today, it's saying, oh, why would you buy the car today? Because they're going to cut prices soon. That's just the exact attacks that have been coming at Tesla for so long, just trying to hurt them. And, the bottom line is the car's a $50,000 car in the United States, same price in China right now. I expect them to keep those prices there. I would only expect them to lower the cost when the efficiency of production increases, which will take some period of time. So I think, if you're Chinese and you want to buy a Tesla, go out and buy a Tesla. It's the best car on the road by far.
Okay. So, Ross, how do we know who the right reporters are and aren't? I mean, this is a story on Bloomberg, too.
Oliver, I'm the right reporter. Tesla doesn't deal with the media, okay? Tesla deals with me. And there's a reason because, they really just don't have a lot of faith that, things come out the right way. And so they would rather deal with investors and the public. If you want to know what's going on with Tesla, just tweet Elon, or talk to investor relations. They want to talk with people who really care about the company, not meant to get clicks and stories. And so I think there's a big issue, and I'm working with Tesla to try to improve this because I do love the media and think they do try to do a good job. But they've got to resolve their issues with the media and the adversarial nature that exists with them and the media. So, I think you're better off following influencers, financial influencers, than the media on a stock like Tesla.
Okay, all right. It was Bloomberg that reported it. Before I let you go, Ross,
I know.
If it's correct, if it's true,
too.
If they do cut it by 20%, is that a bad thing?
If they cut prices?
Yeah.
No, I think what they try to do is, they're trying to sell as many cars as possible, so they're trying to maximize that price point, just like a hotel does when they adjust the prices daily based off room rates and occupancy. So Tesla works very similar with real-time pricing, and we saw them do that a couple times in the U.S. right after launch. So I do expect some pricing changes, but I think it'll be mostly just to, get that right balance between supply and demand.